It was a mixed day on Wall Street today as investors seemed to favor the small cap arena with the Russell 2000 bouncing nicely off of that rising moving average. On the other hand, we did see the more internationally based indices out there like the Dow Jones and the S&P 500 and the Nasdaq that have those big multinational companies in them. Those all fell here today. In fact, the Dow Jones fell for the first time in 6 sessions here today. However, we do see a lot of bullish intermediate confirmation signals setting up. So we'll review that, take a look at maybe some stocks that are reporting earnings here tonight, and then review a trade application on an area of the world that has struggled to keep up with the United States as a rare bearish trade opportunity. So with that, let's go ahead and get started. Welcome to the Market Outlook video. I'm your host, Brandon Van Zee. It's July 19th, 2018. For those of you that are new, first of all, welcome aboard. We're grateful to have you in our audience here tonight. Remember, you can subscribe to our YouTube channel, and while you're there, make sure you check out our description area. In there, you'll see a link that'll allow you to sign up for our email distribution list. That will allow you to receive notification whenever we do post these videos. In addition to that, we also let you know what stocks within the S&P 500 are giving you overbought and oversold cluster signals. In addition to YouTube, we're also heavy users of Twitter. My handle is @BrandonVanZ, all one word. Thank you to everybody who's been liking and retweeting the videos here recently. I did notice that the last one that I did was well up over 100, and so I'm noticing that, and I appreciate that. I know it's the summer doldrums, but you guys are letting us know that you appreciate these videos and you want us to continue them going forward, so keep up the great effort there. In addition to Twitter, we're also on Facebook. You should be able to see that group web address on the icon or the logo in front of you, so feel free to jot that down and join our group over there. All right, let's go ahead and dive into the market analysis for the day. As you can see, I've got chart 4B pulled up here for those of you that are following along at home that are Premium Market Scholar subscribers. Remember, you can always find what chart David and I are on by looking in the upper left there. So this is the chart that shows us the foregrid of the various indices here in the United States and then applies that market forecast mentality to the charts themselves. And so as I mentioned in the intro there, notice that the Russell 2000 was our star here today. Of course, always controversy on one side of the equation or the other when it comes to tariffs, it comes to politics, our president, this, that, and the other thing. So it's interesting to see the different indices kind of moving around depending on what's happening with the US dollar and other macro effects. And so we do see that the Russell 2000 did bounce nicely off of that 30-day moving average right there. Now you'll recall that on Tuesday when I did this video on this day right here, I said, well, we do have a bearish posture. It was a weekly bearish posture, by the way, on the Russell 2000, but don't read too much into it. It was the price was still above a rising moving average. And so when you see a situation like that, you don't want to be kind of led down the wrong pathway and assuming that there's nothing but downside activity in front of you. In this particular case, this stock, or this index, I should say, never did close below that rising moving average, and therefore we're actually seeing a nice bounce opportunity right here. Well, we'll see how that goes going forward. What we do know is that we flipped from a slightly bearish posture back to a strongly bullish posture just like that, because remember, the green line is above 50 here, and so when it flips back to posture that would be considered bullish, we would consider it strongly bullish as well. So right now the Russell 2000 actually looking pretty strong, and you know, the way that this thing closed near the high of the session, up 0.56% on a day when the other markets were largely down, I think this thing is gearing up for a breakout here. We'll see if that happens or not, but it's looking promising right now. The other indices did pull back today, so we'll have to keep our eyes on those. You know, I'm sure David mentioned last night in the video that we did have an overbought signal there on the NASDAQ composite. But remember, if you're looking for reversion to the mean, what I've found when I went back and reviewed this data on the S&P 500 over the last 20 plus years is that it's the oversold clusters that are more effective from a reversion to the mean perspective than the overbought ones. Now maybe that's Fed tampering with always pumping liquidity into the system. I don't know. You can blame a number of things, I suppose, on that, but factually that is what I did notice. And so when you do see these overbought clusters, it's worth taking note of, but don't read too much into it unless you have other technical indicators that are lining up that suggest that there's going to be some sort of huge breakdown on the horizon. As it stands right now, it's not necessarily a great sign that we do see kind of rounding tops that are taking place. So notice that on the Dow Jones, we do clearly look at a rounded top here. In fact, it's kind of close to a head and shoulders pattern. It's not perfect. A few of them are, but the idea could hold true where you have this left shoulder over here. You have the head right here that will have the high point, and then off to the right here you have that right shoulder, and as long as that right shoulder doesn't go up and above that head and it starts rounding that top and going lower, that could be a reversal pattern. We'll just have to see how it plays out. You'll notice that the Dow did close near the lows of its day, whereas the S&P 500 did bounce off of the lows quite substantially. Remember, anytime you're on this chart right here, we've gotten this question a few times, you can just right click on the chart and go to maximize sell. So if you ever see David starting off with SPX right here when he's showing you chart 4B and you're thinking, well, mine doesn't look like that, it's because he's already zoomed in or maximized that just like I showed you there. So feel free to check that out on your own for those of you that have gone through our tutorials already. The other thing I wanted to point out is what I mentioned in the intro, which is, yes, we did get a pullback in many of the indices, but we do have maybe one glimmer of hope there in that we now have bullish intermediate confirmations signals. Now notice we've got that green line on the Dow. In fact, let me zoom in on these and we'll go through them kind of one at a time here. So here's the S&P 500. Notice that we had a pullback in price here today. Now that just happened to be immediately after that overbought cluster signal where we had all three of those colored lines on the market forecast indicator in the upper reversal zone. So we are starting to get a little bit of a pullback. Not surprising in that respect. Whether we get a big pullback or not is the real question, and that is still debatable. But a minor pullback is entirely possible since we've been on such a bullish pathway here recently. This has actually been second best month so far in 2018 after January. So we've had really nice results in the market here recently. But notice that we have the green line, which is the intermediate line that we use to set our posture, that would be considered bullish right now. Anytime it's in the upper reversal zone or just simply rising between 20 and 80, we consider that to be a bullish posture. Now that needs to be joined at the same time with the red momentum line in the lower reversal zone. That one can't just simply be going down. It has to be in the lower reversal zone. So those two things make up the bullish intermediate confirmation signal. Now, you've probably heard David and I state before that although the near-term line in blue here is not part of that particular signal, what we've noticed is that the signal is usually a little bit better if that blue line can be down here below 50 but above 20. And so right now with that blue line still way up there near 80, we would not consider this the ideal setup. In other words, there could easily be another day or two of downside action here before the bulls decide they may want to step in on this. So just be aware of that. Let's take a look at our next chart here, which is the Dow Jones, and it's largely the same. The difference in this particular case is the blue line is down a little bit more. The green line is not in the upper reversal zone, but we still consider that bullish because it's rising between 20 and 80, and that red line is in the lower reversal zone there. That is a pretty extreme red line, not necessarily what you always want to see because it's near that zero line there, but nonetheless, that is another bullish intermediate confirmation signal. And then if we look at the NASDAQ, that was the other one that had that overbought cluster signal as of yesterday. It looks very similar to the S&P 500 where we have another bullish intermediate confirmation signal where we have the green line in the upper reversal zone, the red line in the lower reversal zone, but that blue line is just kind of hanging out there right around 80. So again, not an ideal setup from any of these here today, although those signals do exist. Let's take a look at a couple other charts while we're at it. Let's go on over here now to chart 4C, where we can look at these four different indices from a three green arrows perspective. For those of you that are not familiar with that term, three green arrows, it's just simply a fun way to talk about three different technical indicators. And the three different technical indicators in question are going to be the 30-day moving average, the MACD, and the stochastics. And when you hear us say something like three green arrows, it just means that we have positive indications on all three of those technical indicators. Now you'll notice here on the charts themselves, the charts can be painted with the background of either green, white, or pink in this setup. Remember, with the market forecast, it has to be either green or white. I'm sorry, green or pink. There is no white because there's not like a neutral posture on the market forecast. It's either bullish or bearish. Here, we open up the possibility of having either three green arrows, which is where we're at with all three, or actually all four of our major indices here. Notice the background color right now is green. Otherwise, if you do see white, like we did see right here on the Dow Jones recently, that means we have a mix of green and red arrows. And then if you ever do see red, like we see back here, that means we actually had 3 red arrows during that time period. So again, not a whole lot to report there other than across the board, we got a clean sweep. 3 green arrows on all 4 of our major market indices. So that's a positive sign. Obviously, it doesn't guarantee anything about the future, but generally, if you're a trend trader, you're looking for the markets to behaving themselves if you're entering in new trend trades. And of course, for those of you that need some assistance with that, I teach a top-down trend trading class every Monday at noon Eastern time. We have a blast there, collective intelligence gathering, whole bunch of portfolio managers coming together, building out a portfolio. So we'd invite you to join us for those classes and all the rest of our classes as well. Let's take a look now at our next chart setup, which is 4D. Again, the same 4 indices. What makes this chart different is that this is a 3-year weekly candle chart as opposed to the 3-month dailies that we were just looking at. And here, this is what we call our 1040 crossover method, where we're really looking for long-term posture setting. We're not sweating the details in the short term. We're basically just trying to get the major part of the trend down. And that's for people that don't have an opportunity to be as active with their money. Maybe somebody that has some money sitting in a 401k where maybe they can make a few transactions per quarter or what have you. Well, you'll notice here that the way that we've got this set up is the orange line represents the 10-period exponential moving average on a weekly candle chart. The blue line represents the 40-period moving average. And so what we're looking for is a crossover of those moving averages themselves. We're not looking for prices to go beyond the moving averages. That will happen, of course, but that's not what we're looking for our signal. Our signal is actually the moving averages that are crossing over themselves. And right now, we've been in a bullish run for over 2 years with all of these indices. So had you gotten into the market 2 years ago and just sat there and did nothing, you had satisfactory results. And so as you can see, we continue to be bullish in all 4 of our cases here. Background color is green, signifying that the orange moving average line is above that blue one. In other words, the 10-period more sensitive moving average is holding up better or is stronger than the 40 period, and that's generally perceived as a positive thing for the markets. Let's now take a look at our 12 grids. And this one is our intermarket analysis 12 grids. And the way that we're looking at these, the 12 grids that in this case and in the next 2 cases that I'll show you here in a moment, is anytime you see the pink background, it tells you that we have a bearish posture using that intermediate term line on the market forecast indicator. If you see a green background, it means that we have a bullish posture. And so let's take a peek at how things are stacking up here. We did have a bounce out of the VIX here today, but it was only 6%. So it wasn't dramatic by any means, but you can see that we were close to 3-month lows on the VIX and a nice little pop there. That would be considered a close above the high of the low day. Of course, it's very difficult to trade the VIX because it is so erratic. But nonetheless, I'll point it out for those of you that want to pay attention to that, which is considered a very important index for those of you particularly that are trading options. Notice that the Treasury yields attempted to go higher here today. However, it actually closed lower and produced a bearish engulfing candle there on Treasury yields themselves. Now remember, the flip side of that down below it is the U.S. government long bond. And so bonds went up, yields went down here today. And so that might help support areas of the market like utilities as just one example. And so as we look at the bond chart here, that is also a close above the high of the low day. And so for those of you looking for a bounce trade, perhaps TLT could get you done right there as a bullish trade as well. Other charts that are noteworthy, notice that the Master Limited Partnerships chart had a nice little bounce here today, up over 2%. We actually had a long discussion about master limited partnerships in my question and answer session that I conducted earlier today. That particular class lasted 3.5 hours, and it's where students can pepper me about my opinions on different stocks and asset classes and strategies and what have you. Well, anyway, our good friend Ben P. did ask me a question about master limited partnerships, so we dug into some of the nuances of that particular asset class, And you will see that that is back to a bullish posture right now when we're using something like AMLP right here with that green background. So keep your eye on that. We are at a resistance level, so no telling what's going to happen going forward. But if we're sitting on that fence, we should be falling on the bullish side of that fence at this current moment, since that's what our posture is telling us. Muni bonds continue to be strong. I brought this up a couple of times in recent videos. It's not overly fun to talk about muni bonds. There's not a whole lot going on there, but that's consistency. That's consistency. MUB is the ticker symbol we're looking at there. It remains in a bullish trend, in fact, strongly bullish trend. Other things of note, notice that foreign bonds actually falling. It's kind of interesting. You know, a lot of times you find that the bond market does kind of move in unison with one another, whether you're talking U.S. or foreign bonds. But right now it's the story of the U.S. dollar and how the U.S. dollar and other currencies are impacting the investments themselves. And so anyway, money is flooding into the U.S. government bond, and it's flooding out of the foreign bonds. And you can also see that the U.S. dollar, as I mentioned before, is in kind of a nice upward trajectory, as you can see right here. We did touch a new 3-month high on the U.S. dollar here today. And the flip side of that, of course, is that commodities that are priced in U.S. dollars generally struggle in that environment. And of course, this is one of the uglier charts on the board right down here, with gold just continually lower and lower and lower day after day after day. Ag commodities don't look all that much better. And even crude oil, which had been kind of a holdout from that perspective, and you know, crude oil was a surprising winner earlier this year as a commodity in the face of a rising dollar. Usually that doesn't happen, but even crude oil has been getting blitzed a little bit here recently. So this continues to be a story of strength in U.S. assets, whether you're talking about the U.S. currency, the U.S. bond market, or the U.S. stock market. That is where the action is. And so for those of you that reside in the U.S., which is most of our audience, whether you know it or not, you're in a lucky position right now. A lot of the rest of the world's financial assets are hurting. Let's go ahead and take a look at our next 12 grid here, and this will be the foreign stock market, specifically 12 grid. And here's where you can kind of get a taste of what I was mentioning a moment ago. Most of these markets right here look pretty ugly. There's a handful of green charts on the board, which is nice, but I don't think I'd go on record saying those are good-looking charts. Yes, perhaps we have a bullish posture on them. Perhaps there's a turnaround that could be due, but the charts themselves are not consistently from the lower left to the upper right, where we have nice trends in place. If there are any trends on the board, the trends are to the downside. In fact, some of the uglier charts out there include India. After making a kind of a nice reversion to the mean here recently, they did struggle trading back below that moving average. And then look down below here, South Africa. We're going to review that again in a trade idea here in just a little bit. But EZA, South Africa, house of pain. You know, and that makes sense going back to what I mentioned a moment ago about the gold market. Remember that one of the defining characteristics of South Africa is that it's one of the most prolific mining countries in the world, and of course a lot of deep gold mines there in South Africa. Whether you're talking about Gold Fields or Harmony or AU, a lot of those companies reside there in South Africa. So when the gold market is hurting, a lot of times you will see that kind of bleed over to the South African stock market and the economy there as well. So as you can see, South Africa continues to struggle right there. Let's take a peek here now at our other 12 grid, which is the U.S. sectors 12 grid. And as that populates, you can see things are a little bit rosier here in the United States. And you'll notice here that the posture on the market itself remains bullish. And then we got a kind of a mixed bag with some of the different sectors out there. Now, you guys heard me mention on Tuesday that just because real estate has a bearish posture, I wouldn't read too much into that. It's the same conversation I was having a moment ago about Russell 2000. Yes, the bearish posture could have existed, but price was still above a rising moving average. And I said, don't count them out. Well, take a look at the nice bounce out of real estate here today. If you look at that candle right there, maximize that sell. That's exactly what you want to see. You know, we had this bounce off the moving average over here. We're getting it again right here. We get another day or two to the upside, we'll flip that posture right back to bullish again. But the point is that the price action itself is worthy to be respected at this point. Doesn't necessarily mean you have to take a trade on it, but it means that if you are starting to see a bounce here, you will be in the position, if it does flip back to a bullish posture, to then react to that information. So I like the way that the real estate chart is shaping up right now. I'm not sure if it'll hold or not. We'll wait and see on that, but it is good to see them recover exactly where you want them to on the rising moving average itself. Now, telecom has an opportunity to do that here as well. It hasn't bounced, so we didn't see the bounce out of telecom here today the way that we did out of the real estate. But you'll notice that telecom down below here also has a bearish posture, but price is still above a rising moving average. And so who knows, maybe we get a bounce out of telecom or IYZ in the coming days as well. We'll all be waiting with anticipation there. So otherwise, the rest of the charts are okay. You know, some of them are deteriorating a little bit. Notice that the staples were up today, but it could have been, and the chart doesn't look great, but it could have been a lot worse. Notice that the pricing of staples, let me maximize this as well. We traded fairly low down here, but rallied all the way to close way up here to actually close in the green on the staples here today. So that was maybe a promising sign for that particular sector as well. Now, I mentioned before that we do have, and by the way, here is the utilities. I mentioned that the utilities are domestic only and can be influenced by interest rates. So notice that we had a nice bounce out of utilities here today as well, up 0.92%. Still trading near a high there as well. So anyway, keep that in the back of your mind. Let me go over here to the trade tab here. I wanted to roll off a few ticker symbols that were reporting earnings after hours here tonight. Let me go over to the internet. Oh, and by the way, for those of you that are watching this on our blog, remember you can always watch this on our blog even if you're not a premium subscriber. And if you do so, that's where we would encourage you to click like. So there's your 112 of you that clicked like last time for me on Twitter. I appreciate that. You can also click this icon over here with the Facebook thumbs up to give us a thumbs up there. And then there's this little heart icon under here. It says like 53 right there. If you click on that, it'll then turn red. That'll let you know that the system accepted it. So again, if you guys get value out of these daily videos and are getting educated through them, we would encourage you to do that one thing for us. It's a small ask for you. As you know, it takes a couple hours to put these videos together, get them edited, and send out the notifications and all that. So it's a significant chunk of our day. We want to make sure that from your guys' perspective, it is worthwhile. Now, the other thing I wanted to show you while I was over here is our earnings calendar for this week. It's getting pretty bulky, right? This is the earnings period of the year, or of the quarter, I should say. And you can see that lots of companies coming out with earnings. Of course, IBM had a nice day today after they reported last night. eBay, on the other hand, got its head handed to it here today after its earnings announcement. Well, where we stand right now is Thursday after the close, and as you can see here, and I'm getting this off of Twitter, by the way. Feel free to check out my Twitter feed at Brandon Van Z if you desire. But we had some big players coming out with earnings tonight as well. Microsoft, Intuitive Surgical, Skechers, E-Trade, Cintas, Skyworks, Celanese, Capital One, etc. So let's go rolling through a few of those just to get a sense of what we can expect when the market opens tomorrow. Starting with the big daddy, this is Microsoft right here. Now notice, for those of you that have gone through my charting tutorial, one of the things that I instruct you to do is also to set up your workspace to look like mine. So when you come over here to the trade tab, you should have that built in the middle with that little 1 day, 1 minute graph. Now notice when you're in the shaded part here, like I'm circling, that is the after hours session. So you'll notice that as soon as Microsoft reported their earnings, stock actually went down fairly significantly. That was a pretty sharp pullback right there, but it rallied just as quickly. So that was, take a look at that V that exists right in there. And now we are trading up nicely after hours on Microsoft. Of course, that was a company that I highlighted in a trade application here not too long ago as well. And so you can see that right now we closed at 104.40 on Microsoft. But it is trading after hours all the way up to 105.51. So it should be up at least $1 as long as this holds until tomorrow morning. ISRG was also reporting earnings here tonight. That's Intuitive Surgical, one of the great growth stocks of our day. Of course, makes the Da Vinci robotic surgical equipment that you see in many modernized hospitals these days. Notice that Intuitive Surgical crushing it yet again. This is a legendary stock. This stock is a $521 stock at the market close. It's now trading $20 per share higher than that. It's at around $544 as it stands here in the after-hours session tonight. So that's a promising sign as well for those that want that growth atmosphere, or that growth appetite, I should say. SKX, this is going to be the opposite. I saw this one flashing by here not too long ago, and boy, that stock was getting worked over. So there we are. You can see that Skechers, for those of you that have been shopping for shoes lately, maybe you haven't been shopping enough. And so as you can see right here, we do have a $33.25 stock that in the after-hour session is down below $25. That is a huge haircut. That's like a 20% decrease right there. So as a reminder, there is risk going into earnings, both risk to the upside and risk to the downside. This is clearly showing how ugly things can get when things are not met in investors' eyes. So Skechers getting worked over here tonight. E-Trade was another one. Let's see if they're out with earnings yet. Looks like they are, but stock's not really moving much. It's basically trading at the exact level where it was trading when the markets closed today. Cintas was another one. This one is not a very well-known company. However, for those of you that have followed me in the dividend growth investing world, you'll know that Cintas is one of those elite dividend aristocrat companies. One of the interesting things and unique things about it is it's the only dividend aristocrat that has an annual dividend payment as opposed to a quarterly. But anyway, Cintas did report earnings, but this one's similar to E-Trade. It's not really moving after hours. Skyworks was another one, so SWKS. This one reported earnings, closed today at 102.48. It looks like it is trading higher after hours here tonight, all the way up to 106, so that's a promising sign as well. Capital One was another stock that was reporting earnings here tonight. Looks like another promising one there for us. We've got a $95.37 closing price. It's now trading up there closer to 98 bucks. And then one more, let's do Celanese, CE. And this one really taken off here for investors. Notice that it closed today at nearly 110. It is now trading at 120. So in other words, up $10 per share after hours. Even if you're not that great at math, you know that that's about 10%. So that's a nice healthy move out of a stock in a very short amount of time. Now, as a reminder, none of these trades have to hold by tomorrow morning, but at least gives you a heads up as far as what the market is thinking at this current juncture. So all things considered, it seemed to me like most of those were positive results outside of that really ugly result there from Skyworks. So as we look here at the SPY after hours, it's not really moving. It's basically still in line with exactly where it closed here today. So it doesn't look like those companies really had the opportunity to move the market. The one that probably had the greatest opportunity to do so was Microsoft, since it is one of the biggest 5 companies in the S&P 500, but it's only trading up by like 0.5%. So it's not really moving that much. But if Microsoft comes out tomorrow morning, gets a bunch of upgrades or something along those lines, it would have the ability to then push that market a bit higher. All right, let's go ahead and take a look at our trade application example for the day now. I'm going to come back over here to chart 4A, and we're going to pull up EZA, and that was the one that I mentioned before. This is the ETF that represents South Africa. Now notice after today's pullback in price, it was down 2.4% here today. Notice that we now have this red background color on the chart again, which tells us we went back into a bearish posture. So notice that it had been kind of flip-flopping in recent sessions. But what we notice at just a high level is that this stock is really struggling to have an extended stay above that moving average. It's attempted it a couple of times right there, but it just cannot pull off the feat of stabilization above that moving average. And so that has me wondering if there is going to be further downside action here with this particular security. So when we have these securities like this directly below a falling moving average like we do right here, sometimes that can set up an opportunity for what's known as a bear call spread. And so let me come on over here to the trade tab. We're going to take a look at EZA here. And you'll notice that we've got the calls on the left-hand side of the strike prices here. And typically what we're looking for when we start establishing the strikes that we choose to sell is a delta close to 30. So notice that we do have a delta of 31 here, and I'm looking at the August monthly contracts with 29 days until expiration. So that's your $60 strike. So I'm going to look at selling a 60 and buying a 62. So let me right click, go to sell, and here let's try deep and wide, 2 month, 2 strike. Actually, I don't know if it'll let me do this. It says vertical roll. Yeah, maybe I didn't do that right. Try to be cute there. Let me just do it the old-fashioned way. I'm going to go to right-click on the 60 strike. I'm going to go to sell. Let's just do a vertical, and then I'll manually adjust it down below. So 60, and then I want to change that to a 62 right there. So notice that what I'm doing is I'm selling the $60 call. That's the driver of this trade as a credit spread. So in other words, we want this $57.62 ETF to stay below $60 for the next 29 days if we can help it. We're also buying the 62 call as part of this spread, and you can think of that as kind of the built-in insurance contract. If this stock does launch higher, or this ETF launches higher, even though we think it might be drifting lower, well, if it goes above 62, we're covered beyond that. Now, you're still going to lose money, so I don't want to make it seem like, yeah, you're going to make money if it goes up, down, or sideways. That's not how it works. I think most of you get that. But the nice thing about having that insurance contract kind of embedded within the vertical spread is that it allows you to not lose more money for each incremental dollar that EZA might go up above 62. So it kind of limits your losses in this particular case. Notice we're going to get about 50 cents for this call spread right here. As a reminder, we're typically trying to get at least a 30% return on risk. If you ever want to figure that out, go to confirm and send. Look at max profit versus max loss. And we're going to take 50, divide it by 150, and you can see right there 33.33333% return on risk. And so that one does clear our 30% minimum hurdle rate there. And then if you wanted to kind of take a look at the chart as well, again, let me stress that our break even in this particular case would be $60.50. We add that credit to the 60 right there. And so $60.50 would be where you definitely want this security to stay below for the next 29 days. If we were to look at that on the chart, $60.50 is about right there. So in other words, it matches up nicely with where we had resistance during this 2-day process right here. So if there are heavy sellers of this particular product in that range, that could very well help support our trade thesis here as well. So let's go back here, click confirm and send, and we'll ship that off and see if we get filled first thing tomorrow morning. All right, well, I want to thank you for joining me here tonight. I appreciate your attention. As always, remember, if you get value out of these videos, please go over and click like and retweet and all those fun things on social media to let us know about that as well. David will be back with you tomorrow. Remember, for those of you that are premium market scholars, I'll be sending out an email this weekend regarding the new sector selector breakdown, so feel free to check that out as well. All right, with that, I want to wish you all the best with your trades and your investments. Goodbye for now.